All right, welcome back for another technical review. Today I'm looking at a list of some of my top picks for companies to invest in or swing trade, and I sorted them in order of trading volume for Friday. The first on the list of my top picks is Apple. Um, Apple's been a bit overextended since a big rally leading up to the split. I have a long-term rising channel drawn here over like a 15-year period here. Um, Sometimes these lines need to be redrawn or adjusted. This line could come up a bit. We've kind of exceeded the channel here and here. Looks like we're kind of wanting to trend near the top of the channel here. We've got the 200 period moving average coming up, and it looks like price has been reacting to that. So I kind of like that area to base a trade. I'm still leery about getting in. I own it and I'm holding it, but I'm not buying more way up here. So looking at the momentum here, we reacted to the 200 moving average. We broke out above the cloud, and then we came back down into it. And now we're below the Tinkinson line here. Looks like we're trying to react, so maybe another pullback down here near the moving average line. This little bit of flat bottom of the cloud here indicates an area of support, near-term support. Other support areas to look at are this flat area of this cloud down here, which comes in around our 200 moving average. If you can get price down here around 122 to 125, that looks like a pretty decent entry there. So let's move along here. So yeah, these are daily charts. I like to look at, for swing trading, I like to look at multiple time frames. So on a 4-hour chart, you can see how we pulled back. We had a big red bar here, bounced from the bottom of the cloud. So this is our support area right here at about 127. Right down here where we see the bottom of this cloud, flat area here where we twisted, is a good support area as well, 122. So we've kind of got this, the shape of this cloud here could take price time to break out. It's pretty steep, so and then we've got the Kijinson line right here to suppress the price. For good companies like Apple, I really don't trade them based on Ichimoku. I look at the long-term trend, like we just looked at here. Nice rising channel. We just look a little overextended right now, so not a lot of momentum. I know people like momentum, so Tilray had a lot of volume on Friday. This is still in a very bearish trend, so I would not be trying to go long on this stock at this point. It does look like we've tried to react to the 200 moving average here. We're still below the Tinkinson, the Kijinson, all these moving averages, and the cloud. These are all places where price can react and just head back down. So it's normal to get a reaction at something like the 200 moving average, but that doesn't mean that this is a pivot point. It's just a reaction for now, not even a real huge reaction. If we saw a huge bullish engulfing candle that came clear up here to the cloud, and then we see a continuation where we're going into the cloud, and we have support from these moving averages, then that would be an indication of a turnaround. This is a pretty thick cloud here, so it's going to take time. Take considerable time to chew through it. We are starting to thin out, so I think we're going to see if this can begin to pull up, we're going to see more sideways action until we get to an area of the cloud where we can actually try to break through and begin a new uptrend. I'm just avoiding these for right now. Taking a look at the Qs, we're still in an uptrend here. Daily chart. This has been quite overextended for some time now. So we're zooming way out here to a 15-year chart. Price can stay overextended for some time, as we're seeing right here. We're still in an uptrend. We're still above the cloud, and we're holding our 100. And here's the 50 moving average. We dip below there. So finding good opportunities is getting more and more tricky in today's market. We just had such a big rally since the COVID crash. DraftKings, this thing has rolled over. We're in a pretty bearish trend here. Couple of big red candles. We're trending below all of our indicators here, our Tinkinson, Kijinson, and the cloud. We've actually broken through the 200 moving average as well. I've drawn some support levels here to watch, down around 44 and 38, 39 area. I'm not sure what the news is or what the fundamentals that cause this to roll over. So we base our support areas on areas of price activity, areas where we've reacted before or resisted and then ultimately broke above it. So there's a lot of price action down in this area here. If we can see this thing back down around $32, I think that could be a good opportunity. This is a fairly new stock. IPO'd way back here, April, May of 2020. So anyway, this is definitely in a bearish trend for right now. These are some pretty big red candles right here. I wouldn't be trying to catch the falling knife right now. Ford, someone was asking me about Ford recently. It's looking a little overextended. When I look at a long-term chart here, this chart really doesn't appeal to me much. I like to see a long-term rising channel, something like we see in Apple or Microsoft, Costco, a lot of other names. I think there's just a lot of other names that are better investments. But if you like Ford, this has been a nice trend. I think this COVID crash was a great opportunity. Look at this, clear down to $4, $4.50, and now we're at 11. So that's almost a 200% gain since the COVID crash. It looks like momentum is starting to stall out. So for the first time in quite a while, October of 2020, when we bounced here, we've been staying above the cloud and above our 50 moving average. And now we are trading below the 50 moving average, below our Kijinson, Tinkinson, and threatening to break out below the cloud here. This is kind of an area of resistance here. We've got our Kijinson and this flat area of the bottom of the cloud right here. So I'm really skeptical that this is a good opportunity, especially looking at the long-term picture of the chart there. Bank of America, well, this thing's been pretty strong. I'm not a big fan of Bank of America stock, but if you were in it, I would continue to hold here. It's definitely in a nice uptrend. Let's look at a long-term chart. Looks like we're getting a little overextended here. We could speculate on drawing a rising channel, but this chart's a little irregular, so it's hard to tell where it's going to go, how much further it's going to push up. So this is something you want to invest or trade based on fundamentals and some research. Technically, it's in a strong uptrend. I like pullbacks. If you're going to get into something like this, pullbacks to the 200 moving average. But if you wait too long, you just may not get it at all, because excuse me, this was a good opportunity here, as we can see in history. Of course, when you're live trading, these opportunities can look like fear and panic, and it's hard to know when to get in. So as long as we're trending above a green cloud here, you look for pullback opportunities. Excuse me. So this has been in a long period of weakness here. AMD. I'm in this stock and I'm just holding. It's been, excuse me. It's been in a long-term rising trend. This trend line is pretty steep. This is 5 years, 10 years. So at this point here, we had a major turnaround and a huge rally, and this has been in a nice steep uptrend. It almost looks like we're threatening to break this trend right here. It's not too late for this thing to pull up and continue the trend. I'm sure this has to do with the chip shortage that we're in right now. So basically, I'm seeing consolidation here. This is a long period of consolidation. We're building a base. Right down here around the $75 level seems to be the bottom of the consolidation base. So if you're wanting to get in this, I like that area. Right now we're at 78. We do have some downtrending pressure from our indicators. I think some news about a resolution to the chip shortage and this thing's going to really take off. Could be an opportunity. Picking up good companies in temporary times of weakness tends to work pretty well for long-term investing. You just need to be mindful of this long-term trend and if this is going to break trend. So we definitely wouldn't want to see price start trending below this, well, let's say $73. Maybe we'll bring it down a little bit here. So you start seeing price trending below here. This is going to be an area of resistance now, and more confirmation of a break in trend. Big red flag. Could see some momentum selling at that point. American Airlines. I'm not a big fan of investing in airlines. One of the comments I make frequently is the chart sucked well before COVID. I think we've had our big crash and our recovery, and it looks like these things may stall out here. Just looking at the long-term chart, I mean, we could go back up here to the top at $60, but what really justifies that? I mean, what kind of damage has been done by the COVID shutdown? Long-term lasting damage to cash balances or earnings. So I've drawn this as an area of resistance. Could be support if we get above it. Looks like we reacted here and pulled back down. We're attempting to stay above the cloud here, but we've dropped below our Kijunsen line and into the cloud. So we need to see a resolution now if we're going to break back above or below. This was a take profit signal here. We had some mixed signals back here. This was a lot of speculation about airlines back in here. We had some TK crosses, and we've had another one up here. So quite often these bearish indicators can continue to suppress the price for quite some time until we can recover from them. Microsoft, it's another one I'm in. Good long-term hold. I believe we have this long-term rising trend line. We're looking a little overextended. This trend is pretty steep, but if the earnings are deserving of the trend, then it holds. So I like the pullbacks to the 50 moving average or the 100. Looking for price to stay above the cloud. Tesla continues to show weakness. I've drawn what I believe is a new rising channel. We're trying to hold this channel. Got a little skeptical here. Looked like we were going to break down, and then we had another green candle on Friday. We need to see some follow through and possibly move back to the top of this channel, and that would mean possibly testing the previous high. But what sort of news or anything could justify another move up to near the top of the channel there? Or we may not even get to the top of the channel. It can take considerable amount of time, or if we even do. But there's quite a bit of resistance up here between the 720 and 760 level. This is our area to beat right now if this thing is going to give us a new uptrend. Twitter, this thing's taking a beating. Looks like it's trying to hold the 200 moving average. If you believe in picking up good companies in temporary times of weakness, this could be one of those opportunities for Twitter. I don't trade it. I prefer Facebook. I'm in Facebook. I watch Twitter. I've traded a couple times. So we had this area of support right here, which looks like it failed. So where's our next area of support? Looks like we've got some good price action down this area here, down around $48. Just normally get a reaction at the 200 moving average, but it doesn't mean that that's the bottom. So it's possible this could break. Right now we're way oversold. See how far we are below the cloud and below our Tinkinson and Kijinson. So we may see a pullback and then another reaction, and as these indicators continue to suppress the price, eventually possibly break through the 200 moving average and come down and test some of these price action support areas here. And we've got some flat areas of the cloud in the history back here, right between 47 and 45. That could be an interesting area if we get down there to it. So right now, I'm not in favor of looking for opportunities to go long, trending below all these indicators. Really, you're bottom fishing. But then again, that's also how we get our best prices, best entry points, is looking for these times of weakness. Looking at the history of the chart here, we kind of had this big W-shaped bottom, and then some more consolidation, and then a breakout. Price just looks a little overextended. It looks like we tested the previous high, the IPO price over here, and we got rejected there. I think if you can see price clear back down here between the $20 and $25 range, that would be a nice area to try to pick it up. Excuse me. For now, we just follow the trend. The trend is down until it's not. Snapchat, this has been bearish, but this looks more like consolidation to me. At one point I said it looked like a head and shoulders top, but we really didn't get the follow through down here. We didn't break this area. So I'm liking this area here to base a trade. I think we're going to see consolidation until we get to a point, maybe we'll react around this 200 moving average before we can try to break out to the upside again. Let's look at a long-term trend here. Another one where we had a sort of a V-shaped bottom here. You could speculate this was a cup and handle, a V-shaped bottom, and then the breakout. Well, we had a failed cup and handle breakout here. Let's see, this was the COVID crash? Yeah, that's what caused that. So yeah, people that got in at this COVID crash, let's see, it's gone from $11 to $65. It's what, about a 600% gain? Yeah, no wonder it's selling off, huh? So yeah, I'm just seeing consolidation with Snapchat right now. Let's take a look. Intel. I'm in Intel. It's not a real interesting momentum type stock. It's obviously taking a beating. Um, I'm sure from the chip shortage. So another one you can speculate, temporary time of weakness. Maybe a good time to pick some up. Um, I bought it down here. I saw this area of support down here. Haven't been real interested in this stock in the past, but it looked interesting at this level here, so I did get in. I'm continuing to hold it. Um, I'm not looking for fast money profit in my trades or in my investments. I'm just looking for good buy and hold investment quality companies. Um, I work a lot, and I don't have time to sit in front of a computer and trade these things constantly. I do like to look at the technicals and try to help other people make trading decisions based on technical analysis. But doing too much trading can come to bite you. I like the idea of investing better, especially if you don't have the time. Comcast has been in a nice uptrend here. We've got our uptrend momentum indicators, but we're also at a 52-week high, looks like. It almost looks like we're testing a previous top right here. So we don't like buying the top. We look for opportunities, times of weakness, but it's a pretty good stock. It's been in a nice rising trend. This was a great opportunity here. See how we look at our price action for opportunities, for support opportunities. $32. It's about 85% gain from that area. Facebook has been nice. Pointed out some time ago, we had a period of consolidation and then a breakout above it. We're back trending with our momentum indicators here above the cloud. I'm not sure how high it's going to go, but I think it's a good long-term investment opportunity. If you can look for opportunities in times of temporary weakness, pullbacks to price action support areas. This price action here, this topping out area of this previous consolidation area, and you can see how we reacted over here around the same area. So we were reacting here, struggling to get above it. Finally did. We came down, we tested it here. So this is a good support level right here around 295, 300 area. So right now we're at 319. We're not too far from that support area there. GM has been in a nice trend. It's just I don't like to get in when things are this extended. It could keep going for quite some time, but when I look at the long-term picture, the overall trend just doesn't do it for me. It's in a really nice trend right now, but I thought about buying GM during the COVID crash, but you can't buy them all. So I got in the ones that I like, and I passed this one up. But this is up about 300% since the turnaround down here. We are showing some signs of weakness. Testing the interior of the cloud, and we've dropped below. We've had our TK cross, and we're reacting to the Keynesian line here. I'd like to see these moving averages cross again and get up out of this. Square, could call it consolidation. We're still holding the 200 moving average, and when we get it in sight, we react before we even get there. So I have a 100 moving average, 200. So this could be somewhere around 150 moving average. We could add that to the chart, but I don't have it on mine. This thing has been quite a steep trend since the COVID crash. It just looks a little overextended to me. I don't know how much longer this steep of a trend can continue. If we have a way to measure the angle of the 200 moving average, it looks very similar to the angle that we had here. It looks a little bit steeper than what we had here, but this trend continued for quite some time. We are getting this sort of rolling over shape at the top of the chart here. So yeah, I'm liking these lows here around 215 or so. If you're interested in getting in on that one, I think, like I said, it's getting really hard to find good opportunities right now. Gold, I'm not that interested in, but we've seemed to have perked up a bit. We've broken above the cloud here. So this is our Spyder Gold Shares ETF. Ticker is GLD. Trading for 171.59 right now. Looking at the long-term picture, though, we see these peaks, and we could definitely draw a descending trend line here. So something to be mindful of here. It takes time for these chart patterns to work out. So what I'm thinking is maybe a little bit more of a pullback, come up and test it again, maybe a little more down action till we get support from the cloud, and ultimately break through it. I kind of doubt that we're just going to keep seeing straight up momentum, but that all depends on the fundamentals and sentiment. But I'm really not liking gold as a trade or investment right now. I think there's other much better opportunities or things to invest in. Oracle, this has been in quite a momentum uptrend. I don't like chasing things at the top. Boeing, I'm in. This looks like we've been in a bit of weakness here. This could be an opportunity down here around the 200 moving average. Keep testing the bottom of this cloud here. We do have some downtrending technicals. Looks like we're trying to get above this downtrending Tinkinson. I think Tinkinson is just blending with this line right here is what it is. I believe I can see that the Tinkinson's right here, where we're just testing it again right now along with the bottom of this cloud. I like Boeing. I'm in it for the long haul. It's definitely been in a period of weakness since the COVID crash, and it has not recovered as sharply as a lot of other stocks. Looking at a long term, not sure why I have this line up here. Looking at a long-term rising channel here, we're trying to get back up in the channel, and we're kind of reacting to the bottom of it here. We're pretty overextended up here. Got clear up here near $440. Could be quite a while before we get back up there again, but I think Boeing is a good company. I like Boeing, so that's another one I just hold. Micron, it's had a nice rally. It's another one that I'm in, trying to hold the 100 moving average here. We've gotten pretty extended. Our 200 moving average is way down here, so if we break this moving average, we could trade down considerably here. We need to look at our price action support areas. We're kind of in one right now. This is a price action support area. We're at right now around $85. We got more price action support back in here. That's near our 200 moving average, down around $72 to $75 range, depending on how long it takes us to get there. Alibaba, this has been kind of forming this floor of price action support, but we do have downtrending pressure, so it's interesting to see which is going to be more powerful, this price action support area or a downtrending pressure. It's another one I'm in. I had some big profits that have burned off. I'm still holding a little bit of profit in this. I got in down here at the COVID crash based on this long-term rising trend line. So I like these long-term rising trends. It looks like we're attempting to invalidate the trend here. It's not too late for this thing to pull up, but all it takes is one news headline or something for something like this to blow up. You just never know. Walmart is another company I invest in. We've had some temporary weakness here. I think this was based on the COVID recovery. People think that, well, people aren't going to be hitting the grocery store as much because now they can eat out. But guess what? People still need a grocery shop, and Walmart is a good company. I like the company. So this I felt was a temporary time of weakness. I did buy a little more, and I posted about it in social media groups that it looked like an opportunity, and it turns out it was. Not a lot of fast momentum, but a good stable company to just invest in. AMAT, this is one of my top performers in my portfolio. Technology stock, applied materials, nice uptrend here. We've pulled back to the 50 moving average. We've continued to react there, so I'm looking for this trend to hopefully hold. We are in a pretty steep trend here, so these things can tend to go through cycles where we have a big push up, pull back. Fibonacci levels can help spot these areas where we could expect to pull back. So I hate to just take profits in these and then have a hard time finding an opportunity to get back in. So I'm just holding this. The trend seems to be continuing here. Okay, a couple more and then we're gonna get off of here. Disney, Disney is at a nice rally. We had this breakout down here from the cloud, what they call a Kumo breakout. Had a couple that kind of failed here. We've had some moving averages cross, nice rally, and now we're starting to show some weakness. This could be an area of opportunity. We have this flat area of the cloud here that's trying to offer some support. Pullbacks to the 200 moving averages are usually pretty solid. If we can see prices back down here around 170 based on our price action support here, we gapped up and retested here. It's about a 165 to 170 area. So for long-term investing, I like the idea of scaling into these. So if you want to own 20 shares, maybe pick up 7 or 8 shares at this level, and look to pick up a few more on a pullback based on price action support here. 200 moving average be another area to pick some up. All right, there's quite a few more on my list, but Costco's a nice stock. Pointed out temporary time of weakness here based on the resolution to COVID. This thing really traded off based on the fact that people aren't going to be shopping as much, but we've recovered here. So temporary times of weakness in good solid companies. That is a nice rising trend there. So I don't really see an opportunity to get in right now, depending on how long you plan to hold it. So yeah, just scaling in, adding a little bit here and there, looking for weakness in the stock. McDonald's is another one that kind of traded down after it looked like we were going to have a resolution to COVID. Then we reacted to this long-term rising channel here, and we're back up. So for these good investment quality stocks, I like these long-term rising channels. Google is another one of my top performers. Most retail traders avoid these because of the high price. It's a $2,400 stock. So it's hard to commit to putting $2,400 into just one stock, but it is a great company. It's been a great investment. One more, Generac. This was one of my top performers. I actually took profits in this stock because the trend is just so steep, and I had a lot of profits in this. I bought down here at the COVID crash. Had over a 200% gain in this one, which I know doesn't seem like a lot when you like fast momentum stuff, but so I'm thinking about getting back in near the bottom of this consolidation area here. This thing just continues to consolidate. So I'm thinking about putting a buy order down here around 310. And this consolidation can last for possibly some time until we catch up to one of our moving averages here that the market likes. The cloud is starting to form a bearish twist here. All right. That's it for now. Thanks for checking it out.